Hello! Today we are going to cover one of the most important topics in trading – entry strategies that professionals actually use. Most beginners open trades randomly, purely based on feeling. They see a candle and press the button. In quick trading, this is a critical mistake. A professional never enters a trade blindly. There is always logic, a scenario, an entry point, an invalidation level, structure, and chart context. Today I will show you several strategies that work in any market. Most importantly, they don't require complex indicators. You simply need to learn how to read price action and understand how to interpret these strategies and see which one to apply a specific currency pair. In other words, we start from the chart and gain a clearer understanding of the market situation. The strategies I want to cover are breakout of a level, pullback, a retracement after a breakout, and liquidity test, when price takes out stops and then reverses. Of course, in each section I will show you which tools we use so that you understand the mechanics on the platform. Before we begin, I'll explain it as simply as possible. An entry strategy is a specific moment in time when the probability of movement in the desired direction is higher than usual. This is not a signal or an indicator. It is a moment when price shows an intention to continue moving. These three strategies are the most reliable and universal. Today we will discuss each of them in detail. So, the first strategy is the breakout. This is when price repeatedly presses against a level, resistance above or support below, and at some point makes a sharp breakout. How do you recognize a breakout? Price touches the level several times. Candles become larger, volume and volatility increase, and momentum appears. As you can see here, for example, a breakout occurred, a long candle and a sharp upward move. The candles were consolidating slightly higher and then this sharp jump appears. This is a breakout. We watch the candles and their behavior, how they follow one another and how they increase in size. This allows us to understand momentum and accordingly identify the moment to enter. Upward is if resistance is broken, downward if support is broken. Immediately after the breakout candle, we enter the trade. For example, here we could have entered short and made money during this period. Everything is quite simple in that sense: direction of the trend and understanding candle behavior. If, for example, price repeatedly tested the upper boundary and then a large green candle appears, that is a breakout. I open a buy trade in the direction of the impulse. This is a classic breakout. Now let's choose another currency pair. I'll even show you with an example. Let it be Euro Canadian dollar. Based on the breakout strategy, what do we see? There was a sharp breakout downward, right? A strong candle. Now there is an upward trend. Accordingly, we select the 1 minute time frame and open a buy trade. Let's also look at it from another perspective. Again, we don't forget about time frames. As you can see, there are long wicks, and the trend moves upward. Now there is a small candle downward, but based on behavior, we understand that there was a breakout here and the situation moved upward. Several times the bottom was broken again, which is an important moment where we can open a trade using this strategy. We enter. It is important to understand candle behavior. Again, we look at different time frames. The hourly time frame gives us the overall picture. The minute time frame shows both the general context and different impulses. The second base time frames show impulses. A breakout is about candle behavior. When a larger candle appears, that is the breakout, and we can place a trade in the direction of the trend. This is a classic way to work with breakouts. We now have 15 seconds left until our order closes. It may sound complicated in terminology, but in practice we simply observe the behavior of several candles that came before. We look at levels, how the level was broken, and understand the trend direction. Excellent, we made money, closed in profit. Let's move on to the second currency pair and the second strategy. Let it be Euro British Pound. And the second strategy is called the pullback or level retest. Often after a breakout, price returns as if to check whether the level was truly broken, and only then continues moving in the desired direction. How do you recognize a pullback? There was a breakout, then price returned to the level held, and a reversal candle appeared. This is an ideal entry point. If it breaks upward, we wait for a pullback and then buy. If it breaks downward, we wait for a pullback and then sell. Here we clearly see a downward break on the 1 minute time frame. What should we do here? We need to wait until a bullish candle appears that is not larger than the previous one, or at least comparable, if we put it simply. Then we can open a sell trade on the 1 minute time frame. In this particular situation, opening a sell trade, now it's not recommended. And neither is opening a buy trade. Based on the pullback strategy, the market could now move in either direction, continue falling or sharply reverse upward. Therefore, I don't recommend entering here. Let's look at another pair. Again, entry strategies not only show us when to enter, but also help understand when we should not enter. This chart clearly shows that based on the pullback strategy, we should not open a trade in either direction right now. That would be the random action, and we don't need that. We are not chasing trades. Let's choose another currency pair. This situation is more interesting. Again, as you can see, there was an upward trend. And here we have such a candle. This is a pullback example. Price moved down and the candle was long enough that without understanding the pullback strategy, a beginner would think the price should continue downward. But we know the pullback strategy. Price returned to the level, held it, a reversal candle appeared, and now price continues in the direction of the trend. We can open a buy trend, for example, right now. That's it, and we wait. Again, this is how inexperience can mislead people. An inexperienced trader would sell, while based on the pullback strategy, we should do the opposite. Trade in the direction of the trend after price has tested the level. Again, the strategy defines the entry moment. This is extremely important. Timing matters. We analyze, pay attention to this, and remember, it is better to have a couple of good entries than to lose your deposit with 10 incorrect actions. We are not here to lose deposits. We are here to earn consistently. And trading is a tool that allows us to do that just like now. You see, everything works. Again, here it is, the pullback moment. The overall trend is up, a sharp candle downwards, and then the trend continues upward. This is one of the successful entry moments, exactly where we entered. It is important to understand this, so that our trades are successful. Now let's move on to the third strategy. The third strategy is a liquidity test. I want to say that this is one of the most advanced strategies. The idea is that large players often take out traders' stop losses. Price make a false breakout and then sharply reverses. This is a breakout, but it's false. The candle immediately returns back. How do you recognize a liquidity test? Price approached a level, makes a sharp spike beyond it, and then returns back into the range. The next candle then moves in the opposite direction. When should we enter based on this level strategy? If price spikes below the level, we go up. If it spikes above the level, we go down. In other words, we enter in direction of the reversal, not the breakout. This is very important. For example, let's take this pair. You can see what kind of breakout occurred and then how price reversed. Based on the liquidity test, players understand that stop losses are being taken here and that a reversal is forming. You see a long lower wick that sweeps stops and then closes above the level inside the range. This is a liquidity test. Again, understanding candle length and wicks is crucial. You can see several candles in a row with long lower wicks. And then a moment appears that shows us we need to trade the trend reversal. We enter. The liquidity test helps us understand where players are collecting stops. Again, a long candle downwards and then a trend reversal. If there were a long candle upward, the reversal would be downward. This is called a false breakout, when price doesn't continue in direction of the candle but moves in the opposite direction. We understand this from the behavior of the previous candles that led up to the false breakout. It's not always about following the trend. It is about understanding how to identify a false breakout. Long wicks, candle behavior, and then trading the reversal. Let's look at the overall time frame. As you can see, this is a profitable trade. Here, for example, price broke the previous low and then reversed. It is important to understand these moments. Not to follow the direction of that candle, but instead trade the reversal. This is what the liquidity test shows us. And now, a few concluding remarks. These three strategies are the foundation used by 90% of professionals. Breakout, when the market breaks structure. Pullback, when the market returns to test a level. Liquidity test, when price removes excess players. In these moments, traders are forced out and the market reverses, and we trade the reversal rather than the direction of the candle. If you master these three strategies, you will already be trading at much higher level than most beginners. This is what professionals use. In future videos, we will return to each of these strategies and discuss them in more detail. Today I showed them only in general terms, so that you understand how they work based on the chart. Also, in the next videos, we will mix approaches, working with price action, working with indicators, and then deciding which strategy to choose. I hope this video was useful. I'm glad to see you on my channel. We are here to earn consistently over the long term. I wish you successful trading and feel free to ask questions. I'm always happy to help. Bye!